Hi. In 2026, the way tax works for sole traders and landlords in the UK is changing completely. Not just another update by HMRC, this is a full system change. And here's the worrying part, most people who will be affected don't even know it's coming. So, if you are self employed, if you rent out a property, or if you do both, this video is for you. Because missing this change doesn't just cause confusion, it can lead to penalties, stress, and extra cost. How tax works today, the old system. Let's start with how things work right now because most people are comfortable with this currently. If you are a sole trader or a landlord, you keep records. Once a year, you submit one self assessment tax return. Your deadline is 31st January. You pay your tax and move on. That's the system people are used to. What's changing under Making Tax Digital? Now, here's where everything changes. Under Making Tax Digital, HMRC no longer wants just one tax return a year. Instead, you will need to make 5 submissions every tax year. Let me break that down clearly. 4 quarterly updates once every 3 months, and once final submissions at the end of the year, which is similar to your current self assessment. So, instead of thinking about tax once a year, you will need to think about it all year round. This is a big change, especially for people who run small businesses or manage rental properties alongside their full time job. HMRC says this makes life easier. Really? HMRC says this new system will spread the workload, reduce mistakes, help people understand their tax better. But let's be honest, for many people, this will feel like more admin, more deadlines, more pressure, and more cost, especially if you are not already using digital bookkeeping. And here's another reason HMRC pushing this so hard. The real reason MTD exists. HMRC openly said they expect to raise hundreds of millions of pounds more in tax through making tax digital. Why? Because digital reporting means fewer missed incomes, less room for errors, less room for delay. In short, it helps HMRC close the tax gap. This system is not just being introduced to make your life easy, it is being introduced to make tax collection tighter. So if you are enjoying this video so far, please hit the subscribe button because it will help the channel to grow and I can continue producing such important content for you. Who will be affected and when? Now, this is the part you really need to pay attention to. You will fall under Making Tax Digital if your gross total income crosses certain limits. Important point here is gross income and not just profit. From April 2026, you must follow MTD if your combined gross income from sole trade and or rental income exceeds £50,000. Example, if your sole trade income is £28,000 and rental income is £24,000, the total is £52,000, MTD applies. From April 2027, threshold reduces to £30,000 and from April 2028, threshold reduces to £20,000, which means most sole traders and landlords will be pulled into this system. A big problem no one is talking about. Research shows that around one third of people affected don't even have an accountant. That's a serious issue because without guidance, deadlines can be missed, software choices can go wrong, records may not meet HMRC standards, and penalties don't care whether you were confused or busy. If you know someone who is self-employed or landlord, this is a kind of change they need to know now, not later. Important clarity about quarterly updates. One thing I really want to clear up, those 4 quarterly submissions do not calculate your tax bills. They are simply reporting your income and expenses. Your actual tax calculation happens at the end of the year with your final declaration. Your payment deadlines do not change. So, you do not have to panic thinking you will pay tax 4 times a year. That's not how it works. What should you do next? If you have an accountant, talk to them early. Ask what software they will use, what records they will need, whether fees will change because some accountants may charge more due to quarterly work. Better to know in advance. If you don't have an accountant, start keeping digital records now. Don't wait until the first deadline. Choose HMRC compatible softwares early. The first quarterly submissions under MTT will come quickly and last minute preparations will be painful. Can you avoid making tax digital? Now, let's discuss if it is possible to avoid MTD rules. Technically, yes, you can avoid. One option is incorporating a limited company. A limited company follows corporation tax rules, are not part of MTD for income tax, and they file one corporation tax return per year. But this is not automatically better. Incorporating depends on profit levels, how much money you take out, long term plans. Never incorporate just to avoid admin without advice. That mistake can cost more than MTD itself. Making tax digital is coming whether you like it or not. Ignoring it will not make it go away. So start preparing early to make it manageable. If this video helped you understand what's changing, when it's affect you, what to do next, then that's the exact reason this channel exists. If you are confused about any part of this video, like quarterly updates, thresholds, softwares, penalties, or whether MTD applies to you or not, comment below what you want me to explain properly. I'll make the next video based on real questions, not assumptions. Subscribe to Let's Talk Money, and I will see you in my next video. Keep watching and keep learning.